Hello from Singapore, I'm Rob Carnell. The US-China trade war has been centre of attention here in Asia. China's economic slowdown has sent ripples across the region. Virtually every country is now registering negative export growth. Policy measures are being rolled out to combat this. In China, for example, virtually every policy lever you can think of, with the exception of the currency, is being nudged. Higher debt levels beckon as a result. And let's not get too bogged down in the trade war. That isn't the main reason that Asia's exports and industrial production are suffering at the moment. In the short term, the global slump in semiconductor demand is much more important. The rollout of 5G should breathe new life back into Asia's electronics industries. But that's not likely until next year. Asia is going to remain one of the world's fastest growing and most dynamic regions, but 2019 could be a tougher year than most.
I'm Carsten Jeski. And the German economy, as well as the Eurozone economy, had a much more stuttering start to the new year than previously expected. It's the trade war between the US and China which is leaving its marks also on the European and German economy. It is a little bit of Brexit, and turning to Germany, it is also homemade problems like the automotive industry, which is stuttering much longer than we initially thought. Nevertheless, there are many reasons to believe that the German economy will rebound in the course of this year, because we have record low unemployment rates, we have record high employment rates, we have low inflation, we have higher wages, and we do see investment picking up. Digitalization is one of the main reasons why we see more investments in the German economy this year and also in the years ahead. But still, somehow in between these external risks and a still solid domestic economy, the European Central Bank has decided to do more easing. They rather want to err to the downside, which means for the German economy and the Eurozone economy, interest rates will remain low for much longer than we initially had expected.
Hi, I'm Marieke. And here in the Netherlands, we are less exposed to the trade war than in Germany. But still, exports are the biggest risk to the Dutch economy. That's not just because of the trade war, it's also because of Brexit and the slowing Eurozone economy. At the same time, the domestic economy is doing rather well. Wage growth is finally picking up to about 3% this year. So households are now finally reaping the benefit of economic growth, which they really didn't over the last couple of years. We see that mortgage rates remain low, and this of course supports house prices. We do see that transactions are gradually falling, which means that mortgage production is also slowing this year. All in all, it will be a decent year for households as well as SMEs. Large corporates, they may be hit by slower international trade. To sum it all up, I'd say don't panic, but be cautious. Economic conditions are becoming less favorable than they were in the last couple of years, and risks are tilted to the downside, as we like to say.